Okay, so let's look at these three cases. After we finish these three cases, we finish the issues on PPE. So the only difference you should understand, the only difference is what did you get? Hey, please come back. After that, the next question is, for companies, no matter what kind of things you do, we want to know you made a profit or not. Hello, please come back. 手机都收起来了。同学们，上课尽量学到你该学的，不要在这边浪费时间。不懂就问啊，给你们时间了啊。Waste your time right here. What's the point to waste your time right here? Okay, so you got a cash, or you got nothing, or you got another asset. The next question is, you are the company. What's the most important thing you want? Shani, what's the most important thing you want? If you are the company, you do all of these kind of things, you do any business, what's your point? Profit, right? Otherwise, why you do the business? You do the business, the only target is made a profit. Okay, very good, Evelyn. Made a profit. So, could you tell me if you sell your PPE with $100, could you tell me you made a profit or not? You made a profit or not? If I told you selling price, you got the cash $100, so you made a profit or not? How much you made the profit? What's the point? You should understand what is your PP's book value today, right? If you spend $80 to buy the PP and sell it with 100, so what's the profit? 20, right? If you buy the PP $150, you sell it with 100, so it's your loss 50, right? So when you want to know the transaction, the business, you made a profit or not, how much it is, what's the first number you should know? Your PP's value today. Only you know your PP's value today, you will know you made a profit or not, right? If I told you your PP's value is $80, so what does it mean? After you use your PPE 1 or 2 years, right now your PP's value $80 and you sell it 100. Is your profit or not? Yes, right? How much? $20. Okay? So based on this, I know I made a profit. How much? $20 my gain. Okay? What if I told you today your PP's book value, your PP's value only if today I assume your PP's value, so selling price is 100. If I told you your PP's value today is $110, okay? So what does it mean? You sell it with a low price, right? So that should be your loss. How much? $10. Okay? So what's the point? When you want to know your company made a profit or not, you should understand the first number. What's the first number? Book value. What is your PP's value today? So for example, Eva, how much you spend to buy your iPad? A wrong number. Don't give me the exact number, or just make out the number. Don't think it too serious. $30,000, 3万元. Okay? How long you use your iPad already? 1 year, maybe. Okay. So do you think your PP, your iPad is still worth $30,000? Of course not, right? So you have to figure out after you use your PP 1 year. If I assume right now your iPad only worth $25,000, 2万五. Okay? So your PP's book value right now only $25,000, 2万五, and you are going to sell it $10,000, 1万块. So it's your loss again. Loss how much? 1万五, $15,000. Okay? So what's the point? You should understand your PP's value today. Only you understand the number, you will understand this business, you made the money, or that's your loss. Okay? It's quite important. So that's why no matter no matter how we dispose our PP, you are going to sell it, you are going to throw it away, you are going to exchange it. We need to know this kind of transaction is your profit or loss, right? If you want to know the transaction is your profit or loss, what's the first number you should know? Book value. Okay? So how to find out your PP's book value? Please do the depreciation. So only you do the depreciation, you find out your PP's book value today. Okay? Only this. After this, then what's the next question? Next question is, you will know the transaction is your gain or your loss, whether you made a profit or not, right? So after that, step 2, finally compare with the selling price. You will know the transaction is your gain or your loss. Okay? So remember, that's why depreciation is very, very important. Why depreciation is very, very important? Only you do depreciation, you will know your PP's value today. Okay? So don't forget depreciation. Always, no matter what kind of things happen, do the depreciation first. After do the depreciation, then find out is your gain or your loss. Okay? Any questions? No problem? Then let's look at the case. So look at the case on your slide 119. 119. So what's the case? Your company discard. Discard means what? Retired. Means what? Throw away. Means what? You got nothing. Okay? You think iPhone 8, iPhone 5, no one want it. So you throw your weight. So what did you get? You got nothing. Okay? Then don't forget, always step 1 is what? Step 1, do the depreciation to find out your PP's book value today. Okay? So do the depreciation to find out your PP's book value today. Always don't forget step 1. Do the depreciation to find out book value today. Okay? Here we assume we do this step 1 for you guys already. So after we do this step 1 for you guys already, we told you cost $18,000, accumulated depreciation $14,000. So cost $18,000, accumulated depreciation $14,000. Okay? So what is the book value? If we assume you do the depreciation, so cost minus accumulated depreciation, we know the book value how much? $4,000 book value. Okay? So after step one, I know my book value $4,000 today. So what's the next? You throw it away, right? Discard. You throw it away. So we had to recall what? When you throw it away, step one, when you discard your PPE, throw it away. So you got nothing, right? You got nothing. Then throw it away. You lost what? You lost your PPE, right? So first, you got nothing. Second, you lost your PPE, okay? Because you throw it away. So you lost your PPE. How much? Today, how much? $4,000, right? From your step one, told you. Any questions so far? Throw it away. You got nothing? So you got nothing, but you throw it away. You don't have your PPE anymore. But your PPE's value, $4,000. So based on that, could you tell me this kind of things is your gain or your loss? Your loss, how much? $4,000, right? Because for your PP $4,000, you just throw it away. So I know based on these two information, I know one and two. I know it's my loss. How much? $4,000. Okay, any questions? No problem. If you understand the concept here, right now we use accounting journal entry to describe, to record the situation. So what's the journal entry we use to record the situation? You got nothing. Since you got nothing, do you need to record anything? You don't need to. You lost your PP, so asset you lost decrease on debit or credit side. Credit side, right? So PP decrease on credit side. Loss is like expense. 损失就像费用。Loss is like expense. So expense incurred happen on debit side. Okay, so this is the journal entry we use to describe the situation. Any questions? No problem? Okay. If you don't have any questions, right now, be careful for PP. Remember, PP always, we have two accounts together. What are these two accounts together for your PP? Remember that? What are cost and accumulated depreciation? So what are these two accounts on our accounting books? Cost and accumulated depreciation. So when you look at your accounting books, it will look like what? Like this. Cost $18,000. The cost we use equipment. So here, please change to equipment. Equipment, always we put the cost, right? Also, we have accumulated depreciation to told you value decrease $14,000, right? That's how we got the book value, $4,000. So when you look at your accounting books, you will have two accounts, two numbers. Since you lost your PPE, right? So you had to make all the records disappear from your accounting books. So how to make all the records disappear from your accounting books? Okay, since we throw it away, so means what? Not only your iPad throw it away, all the records from accounting book should be thrown away, right? So how to do that? Accounting, quite simple. How? Make the upper this side. This is it. So equipment, $18,000, right? Make on the upper this side. So asset on debit, make it on the upper this side should be on credit, right? So you put it on credit for your equipment. How about accumulated depreciation? No more balance on credit side, make it disappear upper the debit side. Okay, so we put it on debit side. That's it. So this is how we make your PP disappear from your accounting book. Make it on the upper this side. The upper this side. So you should put your equipment on credit side. You should put your accumulated depreciation on debit side. Then it will be disappear. Okay. So based on this, what's the journal entry we use? Equipment on credit side. Accumulated depreciation on debit side. Did you find out? This is how we made your PPE disappear from your accounting book. You should make it on the upper this side. Okay, so it means what? Means your equipment decrease, accumulated depreciation decrease. Then when you combine these two together is what? Book value, $4,000. So we make our PPE disappear, throw it away. So this is the first thing. What's the first thing? Make PPE disappear, decrease, disappeared from accounting books. Okay? And what's the second thing? Don't forget. What's the second thing? This transaction is your loss. Loss, how much? $4,000. So you should tell them, I throw it away, so I have a loss. How much? $4,000. So that's right. I have to recognize I have a loss, $4,000. So this is the second thing you have to record. What? Your loss increase $4,000. Okay, any questions? This case, discard, retired. So did you get anything? No, you didn't get anything. That's right. We don't record anything you got because you got nothing. Any questions? Based on the logic, if you understand, then it's quite easy for you to look at the second case, sales. Sales, the only difference is what? You got the cash. That's it. The others totally the same. Okay, so let's look at the second case. If today you decide to sell your PP instead of retire it. So this is the case on your slide 123. 123, what happened? July 1st, your company decide to sell your PP. So when you decide to sell your PP, you got what? You got cash, right? So you should understand, what did you get? You got the cash. When you decide to sell your PP, how much? $16,000 cash. So you got cash, how much? $16,000. Okay? When you sell it, date is very important. You sell it on July 1st, 2025. So you should be very, very careful when you sell it. July 1st, 2025, you sell it. But right now, the information told you you have your PP's book value on which date? January 1st, 2025. You have the PP's value. So we only told you on which date? January 1st, 2025. We only told you the information right here. We have cost $16,000. We have accumulated depreciation $41,000. So I know my PP's book value $19,000 on January 1st, 2025. So remember, what's your first step? You should find out your PP's value on July 1st, right? So you should do what? Do your depreciation to find out your PP's book value on July 1st. So don't forget, what's your first step? Do the depreciation. Only you do the depreciation, you will find out the book value. Okay? So don't forget, always, first step, do the depreciation. Find out the book value on July 1st. After you finally find out the book value on July 1st, then what's the next? You know the transaction is your gain or loss, right? So compare selling price and the book value. Compare these two. So step 2, you will find out the transaction is your gain or loss, right? Okay. Any questions? So what we are going to do? Find out the book value. So you had to do depreciation. So could you tell me depreciation, how much? Here we assume, I told you, because here we don't give you the enough information. So if I assume the number is how much? $8,000, okay? So if I assume the number is $8,000, so what's your first step? Record depreciation expense, right? So your first step is what? Record depreciation expense, $8,000. Okay, so this is your first step. Step 1, do the depreciation. After you do the depreciation, do you know your PP's book value? Yes, right? Based on what? Cost the same, right? Then before, how much? $41,000. Today, $8,000 more. So totally, your accumulated depreciation is $49,000. So finally, could you tell me your PP's book value today? Yes, $11,000, right? Based on the book value I have, could you tell me step 2 is your gain or loss? So what is the selling price? How much for the selling price? $16,000. Okay, so compare these two numbers. Step 2, I know this transaction is your gain or loss. Gain, right? Your book value only $11,000. You sell it with higher price. So I know this is my gain. How much? $5,000. Okay? Any questions? If you understand this transaction is your gain, then right now we have to recode the transaction. So what's the effect we have from step 2? Because you sell your PPE, right? So first, you got what? You sell it, so you got the cash. How much? $16,000. Second effect is what? You sell it, so you lost your PPE, right? So your PPE, you lost it, so you lost. PPE, how much? $11,000. For this transaction, you have a gain, right? How much? $5,000. Okay, any questions? Did you find out totally the same as the first case? The only difference what? What did you get? You got nothing, you got cash, or you got another asset. That's it. Others totally the same. Any questions? Okay. Then, what's a journal entry to record the situation? You got a cash increase on debit, right? You lost your PP. Remember how to record you lost your PP. There are two accounts on your accounting books. You want to make it disappear, you should put it on the upper side, right? Okay, so your equipment, $60,000 on your credit. Accumulated depreciation, $49,000 on your debit. So you have to make this on the upper side. Okay, how about your gain? Gain is like your revenue. Revenue increase on credit side. So we are going to put your gain on credit side. Why? Because it's like revenue increase. Okay. So based on this, that's why we have journal entry is what? Don't forget, on your slide 130. Slide 130. Step 1, do your depreciation. So this is step 1. After you do your depreciation, you will find out the book value, right? So what's the step 2? Finally, you know it's your gain or loss, right? So we have to make your PP decrease. So put it on the opposite side. So when you combine these two numbers, you know your book value is only $11,000. So this is the first thing is what? Make your PP disappear. From accounting books. What's the second thing? You sold your PP, right? So you got what? You got the cash because you sell it. So second thing is what? We record sell PPE, got the cash. Okay? And for these transactions, when you compare the money you got and the book value, you know that's your gain. So we have the gain. You got the gain. How much? $5,000. So you got the gain. Got the profit. Gain. Okay, that's it. Any questions? No problem. Then, if we understand that, we want to tell the case 3. So what's the case 3? Exchange. So exchange means what? You got another asset, but you should understand totally the same. Okay? Are you done already? Okay. So let's look at exchange. So on your slide, which one? 137. The only difference is what? You got another asset. So here told you exchange. So what does it mean exchange? You use two things, your old car and the cash. You use two things to exchange to get a new car. Okay? So what did you get? You got the new car. You used old car and cash, these two things, to get a new car. Okay? So exchange, you got what? You got new car. So for the old car, here told you your old car's cost $64,000. Accumulated depreciation $22,000. So could you tell me your old car's book value today is only $42,000, right? How to get the number $42,000? Based on the cost, $64,000 minus accumulated depreciation, $22,000. Okay, so this is your old car's book value right here, $42,000. But if you just sold your old car to the market, they told you only for this old car, if you sell it to the market, you can get the selling price $26,000. So fair value means what? means market value. Means what? Means selling price. So means what? Means when you sell old car to the market, you can get the cash $26,000. Okay? So fair value $26,000 only for the old car. If you just sell the old car, you can get $26,000. But for the old car right now, book value $42,000. Okay? But right now the transaction is what? You decide to use the old car plus you pay the money cash $70,000 more. You use these two things. Try to get the new car. So could you tell me what is the new car's value today? So what is the new car's value today? Based on the market, what is the new car's value? Based on the market value, how much? Then you should see how much your company paid in order to get the new car. How much your company paid? Cash $70,000, right? Also, if they sell the old car to the market, they can get the cash $26,000. So totally how much money they paid in order to get a new one? Should be $26,000 plus cash $17,000. So totally how much? $43,000. Okay, so do you understand? If you sell the old car, you can get the cash $26,000 and you pay $70,000 more. You pay these two things in order to get a new one. So of course the new one totally how much? $43,000. Okay? Any questions? So based on this, you got a new car, how much? $43,000. You paid two things, old car and cash, right? So you got what? You got a new car, right? So you got a new car, how much? $43,000. So what did you get? You got new car. Okay? So you got a new car from the market, how much? $26,000 from your old car. Cash, you pay more, $70,000. So totally you pay $43,000 to get a new car. So what did you lose? You lost two things, right? So what are these two things? Old car and the cash. Okay? So you lost two things. You lost old car and cash. Okay. So the old car's book value, old car's value on your accounting books. Also, you pay the cash. So totally, how much money you pay? You pay two things. Totally $59,000. Okay? Compare these two things. Is your gain or loss? You got $43,000. You paid $59,000. So is your loss, right? How much? $16,000. That's your loss. Okay, any questions? This is all car fair value and the cash you paid. So how to record the situation? Totally the same as before. The only difference is you got a new car instead of cash. Others totally the same, right? So how to record it? You give up two things. You give up the cash. You give up your old car, right? So I had to record. First is you give up your old car. Book value how much? 30 40 42. Yeah, book value 42, right? Also, you pay the cash. So, second thing is you pay the cash. You pay these two things. First is you give up old car. Second is you pay the cash. You use these two things to get what? To get you a new car, right? So I got new car. How much? $43,000, the market value, right? So for this business transaction, is your gain or loss? Is my loss. So I recognize I have a loss, $16,000. Got a loss. Okay. Any questions? If you don't have any questions, we have only 5 minutes. So maybe you finish page 40 and 41. 40 and 41. You finish page 40 and 41. When we talk about exchange, 40, find out the numbers. Okay. So based on the exchange, you find out the numbers for your 40. So what did you get? You got new car, right? How much? Second effect, you give out what? You give out old car for value and you pay the cash, right? Okay. Then the difference is, you know, right? Is your gain or loss, how much? So based on page 40, you find out the number first. Here is the question. So your question told you you use what? Old car. So old car, right? Cost and accumulated depreciation. You use that plus the cash. So use two things, old car and the cash, to get what? To get a new car. So please finish page 40. And every time you got a number, page 41, just recall it. So based on three effects, Based on three effects, you just record it using journal entries. So what are these three effects you have? First, you got what? Got a new car. Second, you give out what? Old car, right? And you pay the cash. Third is, this is your gain or loss. So you just record these three effects using journal entry. That's it. So 40, based on the effect, try to find out the number first. So 40, effect 1, 2, 3 is just help you to find out the number. After you find out the number for effect 1, 2, 3, you just recall effect 1, 2, 3 using journal entry on page 41. We don't have time to double check it. So I give you a time, 1 more minute.哦，错了，哪里错了？Here, you see? Okay. Don't forget, equipment always. You give out your old car means we have two accounts always. What's the two account? Equipment and accumulated depreciation, right? So when you give out the old car, you have two accounts, have to make it disappear from your accounting books. Okay, let me show you the answers because of time. So double check it by yourself. First page 40. At the same time, I'll try to make a roll call, right? Kenya, Vivian, Guo Qianyu, not here. Kevin, Rita, not here. Tim, Tai Yan, Kay, not here. Punch, not here. Jasmine, David, Julian, Anderson, Chloe, Oscar, Rain, Hercules, Cindy, Ivy, Christine, Darwin, Darwin, Ray. Okay, page 41, right here for the answers. Shani, Hank, Trisha, Edward, Phoebe, Claire, Reese, Vanessa, Eva, Bill, Kelly, Selena, Oliver, Crystal, Ari, Jonathan disappeared. Okay, so what's the journal entry we use to disappear Jonathan? Debit or credit? So we should record debit or credit? 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 That's because you assume Jonathan is asset. So credit, right? If you assume Jonathan is liability, then we should put it on debit. Shane, Evelyn, Nate, Skylar, Finn, Sandy. Okay, so this is journal entry. If you don't have any questions, that's it for today.